What's up, everyone? My name is John, and welcome back to Talk Finance. Today, we are going to be discussing Microsoft as an investment and a new upgrade Microsoft is making with its Bing search engine. But before we continue, I wanted to thank everyone so far for the incredible support. I appreciate every one of you for taking the time to watch the videos and hope you find them informative and helpful. And I hope you enjoy watching them as much as I enjoy making them for you. If you do enjoy this video, consider giving it a like. Also, you might as well subscribe while you're at it. As a thank you, here's a picture of a cute squirrel waving. Okay, so as you know, Microsoft has a history of innovation and product development. They have been able to grow its product offerings as well as increase its position among the tech industries to make sure they are well-rounded, diversified, horizontally integrated as well as vertically integrated company. What I mean by both horizontally and vertically integrated is that they have been able to grow and offer more products not only from buying companies in similar industries at the same point in the supply chain, but they have been able to also buy companies that operate before or after them in the supply chain. So they have bought companies, giving them control over every process and product they offer from start to finish when possible. Microsoft's current share price sits at $233.29. That is down 7.87% from its 1 month high, which sat at $257.22, and it's down 26.14% from its 1 year high of $323.41. But I think it's all relative and whether or not you see this company being able to continue its growth. I mean, if you compare its share price and growth from when a company first went public in 1986, you would see that the company went from 10 cents a share to as high as $336 a share. I know, 36 years of growth seems like a long time, but even if you bought this stock 5 years ago, you would be up 159%. But obviously, we can't base our future purchases and investment decisions on past performance. So let's look to see if Microsoft is still a good buy at these prices. As you know by now, if you have seen some of my other videos, I look at more long-term investing. I want to purchase a company and hold it for at least 5 to 10 years. One of the many reasons I buy quality dividend companies is because I would like the option to receive money in the near future or retire early without having to sell my shares of a stock. I think you should have some growth, value, and dividend companies in your portfolio. Microsoft's current market cap is 1.73 trillion. That is very impressive, especially when you realize that there is only around 6 companies in the world that have $1 trillion market cap. They also have around $107 billion cash on hand, which they have been using to purchase companies in different parts of their diversified portfolio. The most recent one you probably heard of is called Activision. This deal closing would make Microsoft a gaming powerhouse by acquiring even more gaming titles, making Microsoft the third largest gaming company by revenue in the world. Another acquisition which has helped round out their business side is LinkedIn, which it acquired in 2016. Although as a social platform, most didn't see it as a powerful tool, it has recently gained in popularity because of the big tech layoffs this past year. Microsoft's cloud services are a big part of its offerings, and when they acquired Nuance Communications in April of 2021, they were able to do just that, expand and augment the Microsoft Cloud for healthcare with Nuance solutions. They have many other acquisitions of importance, but let's move on to Microsoft's current trailing 12-month PE ratio, which currently is 25.04. Now, some analysts believe that this is still overvalued and that we should wait for the PE ratio to be lower, but Microsoft is a large company that in a recent bull market was trading at a PE ratio as high as 35. Although I will agree that the company could continue to fall in share price and its near future earnings might not be as high as expected, it will still be a company that continues to grow like it has been doing for many years. Let's take a look at their dividends. Microsoft has a healthy dividend sheet, and although they haven't been paying them for too long, only consistently since 2013, you can see that they have been increasing their dividend year after year. They currently pay a 1.2% yield, which translates to a $2.72 a year dividend paid quarterly. Now, I could go on and on about Microsoft's financials, but I want to talk about some recent updates Microsoft has announced, such as their investment in OpenAI, specifically ChatGPT. What is ChatGPT? Well, if you haven't used it yet, then let's take a look at their website. They say, we've trained a model called ChatGPT, which interacts in a conversational way. The dialogue format makes it possible for ChatGPT to answer follow-up questions, admit its mistakes, challenge incorrect premises, and reject inappropriate requests. ChatGPT is a sibling model to Instruct GPT, which is trained to follow an instruction in a prompt and provide detailed response. So I use ChatGPT and I can tell you it's becoming a powerful tool. It can write essays for a class which can't be tracked by most software, give you recipes, financial advice, and a lot of other information. Although I will say it's not always 100% accurate, but the way it delivers the information is so convincing and more thorough than when you Google search an answer. So Microsoft is wanting to integrate ChatGPT into its Bing search platform. A lot of people and analysts have been saying that this will finally put Bing on top as the preferred search engine, or be able to take a larger size of the market share Google holds, which is 86%, and Bing holds anywhere from 6 to 9%. Most information on this seems to change depending on where you find the information, but it is growing. It is safe to say Google owns the search engine market and therefore the advertising market in this area as well. This Bloomberg article says that Microsoft Nadella takes fresh aim at Google with OpenAI talks. On top of the $1 billion investment Microsoft already had made early on, they are thinking of investing another $10 billion into OpenAI, which has a recent valuation of $29 billion. It also says that ChatGPT, which generates astonishingly human-like conversational text in response to prompts or queries, has lit up the internet since its introduction at the end of November, gathering its first million users in less than a week. Its ability to imitate the way real people talk and write has sparked concern about its potential to supplant professional writers and do students' homeworks for them. The tool has also been called a potential threat to Google's core search business. I do want to comment on this part because although I agree that ChatGPT being integrated into Bing can make it a powerful tool and really help Microsoft take a bigger share of the search engine market, which would also increase its profitability with advertisers, I don't think it will be taking Google down anytime soon. Google is a household name. When it comes to searching things online, think about it. Most people, when they tell you to search for something, they tell you to Google it. Hey, why don't you just Google it? It has become synonymous with searching.
Google it.
No.
Google it.
No.
Why wouldn't you Google it? I just told you Googling.
Microsoft can compete in many arenas. Most would agree it's a pretty safe company to invest in. It is diversified in many markets and industries. It holds a lot of cash, pays out dividends. Its cloud business and its growing business integration portfolio are just a few things that make them a good investment. But we also have to remember some of the things that they also invested in that Google was able to beat them on, such as Microsoft Edge. Let's be honest, most people use it to download Google Chrome. What about Gmail? Being able to integrate to do business as an alternative when it comes to setting up video interviews and conferences. Although Microsoft Teams and Outlook take a win on that one, it is a pretty good competition. I know Microsoft tried to have its own phone with its own app store, but it just wasn't worth it for them to compete in that market. But Google has been able to adapt by creating its own smartphone, the Google Pixel. I think a lot of people think of Google as just a search engine, but they have grown past that and become the Alphabet company, the same company that owns the platform you're currently watching this on, YouTube. I'm not saying that one company is better than the other. I just think there are two separate companies in different parts of the tech industry that have been diversifying their portfolio and happen to have a lot of the same industries they are now competing on. For Microsoft in this case, I think this would be a great win if they're able to take a larger share of the search engine market as well as advertisers than what they currently have, even if they don't beat Google in this space. But I think Google does have to keep an eye on that side of the market because a big part of their business is their search engine and advertising. I will be buying Microsoft as long as it's around the $225 price point or lower, and although I believe the price will go below that most likely again, I am investing in this company because I believe in its long-term growth and that it will continue to grow and diversify its portfolio. And hey, it pays a good and growing dividend. If you would like to see more videos like this, let me know in the comments. What are your thoughts on Microsoft? I feel like we don't hear enough about them since they are always mentioned as an overvalued, safe company in its current market. Do you think it's a great time to buy the discounted tech giant? If you enjoyed what you saw, please give the video a like and consider subscribing. See you next time.